Good morning. As the sun rises over the city and the world gets moving, there's a lot happening this week that could affect your wallet, your commute, and even the global economy. Oil prices have taken a sharp turn downward this week, impacting everyone from Wall Street investors to families filling up at the gas pump. The effects are being felt across industries, from transportation to manufacturing, and even in the stock market. Brent Crude, the international benchmark, fell to $67.17 a barrel, while U.S. West Texas Intermediate, or WTI, dropped to $63.53. That's a slide of over 2% in just a matter of days, a significant move in the world of energy markets. The main reason behind this sudden drop? An upcoming OPEC Plus meeting scheduled for this Sunday has the entire market on edge, with traders and analysts watching every development closely. Investors are bracing for the possibility that OPEC Plus, the coalition of major oil-producing countries, may decide to boost oil production. If that happens, it could flood the market with even more supply, pushing prices down further and affecting global trade. The law of supply and demand is in full effect here. When there's more oil available, prices tend to fall. This basic economic principle is playing out on a massive scale, with real consequences for consumers and businesses alike. Decisions made in a Vienna boardroom can ripple out to affect your daily commute, the cost of shipping goods, and even the price of groceries. It's a powerful reminder of how interconnected our world really is. Traders are already reacting, selling off oil contracts and betting that prices will drop even further after the meeting. The uncertainty is creating volatility in the markets, with investors trying to stay one step ahead. This anticipation and speculation are fueling the current price slide, as everyone tries to predict what will happen next and position themselves accordingly. It's a stark reminder of just how much influence a handful of countries have over a resource the entire world depends on. Oil isn't just a commodity, it's a lifeline for economies, industries, and everyday people. All eyes are now on what OPEC Plus will decide this weekend. Their choices could set the tone for energy prices, economic growth, and even inflation in the weeks and months ahead. Stay tuned as we continue to track these developments and what they mean for you. This Sunday's OPEC Plus meeting is the most anticipated event in the energy world. The alliance is debating whether to raise production targets for October, a move that could shape oil prices for months. At least 8 key members are reportedly in favor of a production hike, aiming to reclaim market share even if it means lower prices. The strategy: sell more oil even at a lower price, to squeeze out competitors and solidify dominance. This marks a shift from prioritizing high prices to focusing on long-term control. Every rumor and statement from oil ministers is under the microscope. Will they go big, play it safe, or surprise everyone? Until the announcement, traders are betting on more supply and lower prices. The uncertainty alone is driving market volatility. Sunday's decision will set the tone for the rest of the year. To truly understand why oil prices rise and fall, you need to know about OPEC Plus. This group is at the heart of the global oil market, shaping the cost of energy for everyone, from governments and businesses to everyday drivers. OPEC, or the Organization of the Petroleum Exporting Countries, was founded in 1960. It brings together some of the world's biggest oil exporters, including Saudi Arabia, Iran, Iraq, and Venezuela. Their main goal? To coordinate oil production and stabilize prices, making sure the market isn't flooded or starved of oil. But OPEC alone isn't the whole story. The plus in OPEC refers to other major oil producers, most notably Russia, who joined forces with OPEC in 2016. Together, this expanded alliance controls over half of the world's oil supply, making it a powerhouse with the ability to sway global markets. By working together, OPEC Plus can decide how much oil flows onto the market. This gives them enormous influence over prices, energy security, and even the economic health of countries around the world. When OPEC Plus acts in unison, whether by cutting or increasing production, their decisions ripple through financial markets from Tokyo to Texas, affecting everything from stock prices to the cost of a plane ticket. In many ways, OPEC Plus operates like a cartel. By agreeing to raise or lower output, they can push prices up to boost their revenues, or bring them down to compete with rivals and maintain market share. During the COVID-19 pandemic, when demand for oil collapsed, OPEC Plus made the unprecedented move to slash production. This helped prevent a total price crash and protected their economies. Now, as the world recovers, They can open the taps to flood the market, or tighten supply to keep prices high. Of course, each member has its own interests and economic needs. Negotiations can be tense, with countries pushing for policies that suit their own budgets and political goals. But when they finally reach consensus, the world pays close attention. For example, Saudi Arabia, with its vast reserves and deep pockets, can afford to keep prices low for longer periods. Other members, like Nigeria or Venezuela, depend on higher prices to fund their governments and social programs. That's why OPEC meetings are high-stakes events. Behind closed doors, ministers debate, negotiate, and sometimes clash, knowing that their decisions will have global consequences. For billions of people, the outcome is personal. When OPEC Plus changes course, gasoline prices at the pump can jump or drop overnight, affecting family budgets and business costs everywhere. That's why every move OPEC Plus makes is headline news, watched by traders, politicians, and consumers around the world. OPEC Plus is shifting gears, from keeping prices high to grabbing more market share. This marks a significant change in strategy for the world's most influential oil alliance, signaling a new era in global energy politics. After a year of tight supply and strong revenues, key players like Saudi Arabia are ready to let prices slide to expand their influence. They're betting that by tolerating lower prices, they can squeeze out competitors and cement their dominance for years to come. The goal is clear: make it tough for competitors, especially U.S. shale producers, to stay profitable. These rivals have higher production costs, so a drop in prices could force them to scale back or even exit the market. By boosting supply and lowering prices, OPEC can undercut rivals and sell more of their own cheaper-to-produce oil. This approach not only increases their market share, but also puts pressure on countries and companies that can't compete at lower price points. It's a calculated move to remind the world who controls the market. OPEC Plus wants to send a message. They have the power to shape the direction of the global oil industry, and they're not afraid to use it. This pivot signals a long-term strategy. Accept lower profits now for greater dominance later. It's a gamble that could pay off if competitors falter and OPEC Plus emerges even stronger. Consumers may see relief at the pump, but high-cost producers could face real trouble. For some, this could mean layoffs, shuttered operations, or even bankruptcy if prices stay low for too long. For OPEC Plus, it's about shaping the global energy landscape to their advantage. Their decisions ripple across continents, affecting economies, governments, and everyday people. The message is clear: market share now matters more than price. This shift could redefine the balance of power in the energy world for years to come. The world is watching how far they'll go, and what this bold move will mean for the future of oil, energy markets, and the global economy. This potential October production hike is the next step in OPEC's ongoing strategy. Since April, they've gradually added 2.2 million barrels per day back into the market, testing how much supply the world can handle. The UAE even secured a special increase, showing how internal negotiations shape the group's decisions. The phased approach aimed to meet rising demand without crashing prices. So far, the market has absorbed the extra oil, keeping prices stable. With demand holding up, OPEC Plus feels confident about another boost. The end of the current phase in September sets the stage for Sunday's big decision. Previous increases were a test, one the market passed. Now, OPEC Plus is ready to push further, betting the world can handle even more supply. Sunday's meeting will reveal just how bold they're willing to be. OPEC Plus isn't the only force moving oil prices. U.S. economic health is just as crucial. America is the world's top oil consumer, so signs of a slowdown here matter. Job openings recently hit a 10-month low, hinting at a cooling economy and weaker fuel demand. This has sparked talk of a possible Federal Reserve interest rate cut to boost growth. But a rate cut is a double-edged sword. It signals economic weakness, which drags down oil demand. The market now expects both more supply and less demand, a recipe for falling prices. It's not just about OPEC Plus pumping more, it's about the U.S. possibly needing less. The combination is putting real pressure on oil markets. All eyes are on the next economic moves. U.S. oil inventories offer a real-time look at supply and demand. Latest data shows crude stocks rose by 622,000 barrels last week, a bearish sign for prices. Rising inventories, especially during peak demand season, means supply is outpacing use. The market is now waiting for official government numbers to confirm the trend. If the Energy Information Administration also reports a build, it will reinforce the idea of a well-supplied market. High inventories push prices down, as buyers know there's plenty of oil available. The focus on stockpiles highlights how quickly market sentiment can shift. With OPEC Plus poised to add more supply, the market is tilting from deficit to surplus. That's why prices are under pressure right now. When oil prices drop, consumers win. Lower gas prices mean more money in your pocket. Industries like airlines, trucking, and manufacturing also benefit from cheaper fuel and materials. For families, it's relief at the pump and on monthly budgets. But oil producers and exporting countries lose out, facing shrinking revenues and potential job cuts. High-cost producers like U.S. shale drillers are hit hardest. Lower prices can slow investment and lead to layoffs in the energy sector. The U.S. economy feels both sides' energy states may suffer, while manufacturing and transport thrive. Globally, cheaper oil can boost growth, but also destabilize oil-dependent nations. It's a complex web of winners and losers. Every price swing sends ripples through economies worldwide. As the week ends, the oil market faces a turning point. The OPEC Plus meeting on Sunday is the main event. Will they hike production and by how much? The size of the increase will set the market's direction. Watch for the latest U.S. oil inventory data. Rising stockpiles will reinforce the case for lower prices. Economic news from the U.S. and China, plus any Federal Reserve moves, will shape demand forecasts. Listen closely to OPEC Plus leaders after the meeting. Their tone will reveal future intentions. Are they hinting at more increases or cautioning about falling prices? The answers will shape oil and gasoline prices for months to come.